Hello everyone, welcome to Bald Guy Money, and this week was the week when the empire struck back in that the S&P 500 avoided a fifth straight losing week, but the modest gains on the index for the week did little to offset the big losses it's experienced so far in 2025, as it is now down 4% on the year, with silver and gold moving in the opposite direction, and they're up 14 and 15% respectively so far in 2025. Now, despite that small recovery in the S&P 500, the largest paper assets in the world continued to slide in relation to gold and silver, which now make up 55% of the value of the world's top 10 investable assets, not including bonds or real estate, meaning this key measurement of safe haven demand has now increased 5 weeks in a row, with silver now making a strong challenge for the 6th spot on the list against Google. And although it remains in 7th place, I think we will see silver in the 5th spot as soon as April and the 2nd spot as soon as next year. So why do I say that? Well, when I look at the data, I see the average closing price for silver in a very strong uptrend. And this is driven by real demand, which anyone following the silver supply and demand dynamics will know. The demand and use for silver is significantly higher than the supply, and as a result, silver so far in 2025 is at the second highest nominal closing price on record after 2011, as measured in US dollars, despite the fact that the US dollar is very strong on the dollar index at 104 today compared to where it was in 2011 when it made that nominal high when it was at 73. So considering these very bullish factors for silver, there are a couple things I want to explore in this video to determine where we're at with the current silver bull cycle, starting with how high the price of silver is really right now. And to determine that, we're going to look at multiple factors, including other currencies and asset classes. Once we've covered that, I want to legitimately answer the question, is it possible that silver will never go below $30 an ounce again? And I think some of you may be surprised at my answer. And once that's covered, I want to give you all an update on gold and silver in a crisis. I want to remind you all about why you need it and how it's used, with specific real-world examples from the last few weeks that will make even the gold and silver haters want to have some. So watch to the end for that. Now, just before we dive in, please remember to check out www.summitmetals.com if you want to buy gold and silver at a great price from a dealer you can trust, including 5 ounces of silver at spot if you use code NEWCUSTOMER, and I'll leave the link to this deal in the video description below. And just as a reminder, they do physical gold and silver IRAs too, and you can find out more about that at the summitmetals.com website. Okay, so diving in, as I said a moment ago, silver is now at the second highest nominal average closing price in history when measured in US dollars. And the only year that's higher on the chart here is 2011. Now, I recognize the fact that the average person probably isn't as excited by this as I am. I mean, we're still about 10% off of that 2011 high, and when we factor in how far we are from the April 2011 trading high of $49.83 per ounce, it's no wonder why people say silver stinks. But as I alluded to earlier, the current US dollar price of silver is completely misleading. In fact, I would argue that people who only look at the US dollar price of silver don't really understand what's happening in the market right now, or how much stronger the US dollar is today in relation to other currencies versus where it was in 2011. Because, and I think it's much easier to see here, the US dollar was basically at its weakest point in 2011 when silver was making those incredible highs, and today the dollar is not only about 12% above its average level of strength since 1990, it's 43% stronger in dollar index terms than it was in 2011. So if we apply that consideration to the current prices of gold and silver, you have implied prices with the US dollar index being equal to where it was in 2011 at $4,318 per ounce of gold, which is already at a nominal high, by the way, and $47.15 per ounce of silver, which is very close to that 2011 blow-off top high. And this is also why, when measured in other major currencies like the Canadian dollar and Japanese yen, silver is already at an all-time high today, higher than it was in 2011, and in currencies that it hasn't achieved that all-time high yet, like the euro or British pound, as you can see here, it's not far off. And as the US dollar starts to come down in relative value versus these other currencies, a process that has already begun, by the way, and is advocated for by the current president of the United States, this is going to send silver even higher in all currencies. And this is precisely why I tell people that if you feel you missed out on gold's major moves, don't miss out on what's about to happen for silver, because it has more upside on the way, and the US dollar price has been masking the real bullish situation for the metal. Now, I've just explained why the price of silver, at least as far as I see it, is stronger than the $33 per ounce spot price suggests. But that doesn't mean I think the silver price is high right now or anywhere near where it's going to be. In fact, borrowing a theme from a video I did last year, I'd say the price of silver is probably closer to the bottom today than it is to the top. And as proof of that, I briefly want to revisit this data set I showed you all last week, which shows the S&P 500 priced in silver, because it tells us that a precious metal like silver, despite being stronger in currency terms than maybe we give it credit for being, is still quite weak in relation to stocks, despite the fact that the market clearly values it more than it did at the 2000 stock market highs. And I think that has a lot to do with the industrial demand for silver that exists today that didn't exist in 2000. Anyhow, this data also suggests that we could realistically reach $68 to $75 per ounce for silver in the next 2 to 3 years. And if you want a deeper dive on this data and on this analysis, please check out my video from last week. But moving on, and I wanted to use a second data point here because we have to make sure we're being honest and not just looking at a single bias comparison as so many people here on YouTube do. I wanted to look at the median US home sales price measured in silver. And when looking at this chart, the first thing that stands out very clearly to me is a confirmation that the market clearly values silver today more than it did back in the 1990s and early 2000s, as the median US home price measured in silver has gone from an average of 31,000 ounces in the period from 1990 to 2006 down to an average of 15,000 ounces of silver in the period from 2007 to 2025. So that's something for the silver skeptics out there who always say silver hasn't done anything. This data clearly shows it has done something. Now, another thing we're seeing here is that just like with the stock market, silver is starting to gain value versus home prices as they peaked back in 2022. And we're moving back potentially towards those lows of 2011, which once again suggests the price of silver can double from here. A point that I think becomes painfully obvious when we consider the median price of a US home in gold and silver today versus the blow-off top highs of 2011, where silver is still 3 times cheaper today than it was in relation to a US home in 2011 at the highs, while gold has already basically reached those 2011 levels or is not far off from them, indicating that, as Rick Rule said on my channel last year, the generalist money, the retail investor money, has not yet entered the game for gold and silver. And there is still a lot more upside for both metals coming, but especially for silver. So considering all of this data, do I think the price of silver will ever go below $30 again? The answer is, if it happens, it is going to happen this year. And that's because we have historically seen a flush out in silver price some 10 to 13 months following a Fed decrease in the target interest rate before the price of silver goes to much higher levels. Now, is it going to happen this time? As a gentleman's handshake bet, I would say yes. I think we will see one last shakeout in the price of silver, and that's going to be it. You can kiss the number 2 as the first number in the price of silver goodbye until it hits $200 an ounce. But a gentleman's handshake is much different than making a bet with money. And as far as how I am allocating my cash right now, I am buying silver, because if I weigh the benefits of saving a few bucks per ounce versus the risk of not adequately preparing myself for big moves up like we've seen in the price of gold over the past 12 months, The choice is simple. I choose to be smart and use the time I have now so I don't get to a point 2 years from now wishing I could buy more silver for $33 again, just like many of you who missed out on silver at $23 the last time we were there, missed out because you were waiting for silver to go down to $17 per ounce. So please share your thoughts with me on that topic in the comments section. But just before we get to the gold and silver in a crisis update, please remember that if you want to diversify your hard asset portfolio into land, again, maybe by using some of your stock market gains to buy a physical asset, visit channel partner landofland.com. They make buying land easy, the process is transparent, and by using promo code BALDGUY, they will give you $300 off from any piece of land you buy from them, whether it's at auction or handpicked from their online offer. So check them out at landofland.com or call them at the number on the screen to get started and get something that can't be printed by the Federal Reserve and get it before the Federal Reserve starts printing. Okay, so moving on to this week's viewer question, and it comes from Mr. Kern Jaja. And remember, you can put your questions in the comments section of every video I do. I pick one to appear in every video I make. And he asks, Mr. Kern Jaja, how do you use gold and silver if all heck breaks loose in the economy? And for those of you who watch me regularly, you know I love this topic because it's something that people are actually dealing with on a daily basis. And I'm not talking about socialist nightmares like Venezuela or failed states like Zimbabwe. I'm talking about the people that are struggling in the United States, the UK, Canada, Australia, and Germany, people who are most likely watching this video, 70% of whom did not benefit from the massive increase in asset prices the last time the major central banks of the world decided to hit copy and paste 20 trillion times on the world's money supply. And it's sad because most of you weren't aware of the dangers. You'd been lied to each and every day for years by the governments that fed you all fake statistics, by politicians who claimed to represent you while representing special interests, and by network news channels that said they were reporting the truth when they weren't actually reporting the truth at all. Again, sadly, a lot of people got bamboozled by this. And it's led to situations like this in the United States where many baby boomers fear losing their homes because they didn't factor in 10% inflation when calculating for their retirement needs. And headlines like this from Australia that tell us people are literally uprooting themselves and moving to other places because they can't afford to live in the city anymore. And maybe the most disgusting headline of them all from Canada, where they are apparently using the term unretirement now as Canadians who can barely afford the basics return to work while their politicians implement tariffs on U.S. goods, which is an additional tax on the citizens of Canada on goods they are already having difficulty affording. And if you're watching from Canada right now, that is what those reciprocal tariffs are. They do not help you. The politicians who are saying they are defending you are hurting you even more. So I hope I have adequately shown you all that this is not something that we are just patiently waiting to see, this economic disaster. As I've said in the past, it's something that we are in the middle of right now, even though it may be happening a lot slower than some of you expect it to happen or have been expecting it to happen. And it's something that any of us can experience at any time in any place. But of course, gold and silver are protection against this, and I have proof, and I am going to show you a couple great examples, starting with an update from Turkey, an industrialized country, a member of NATO, a place where I used to do business quite often, and a place I still visit for vacations today. And it is a country that has experienced the textbook definition of hyperinflation, which, as you can imagine, has impacted retirees the most. People who had significant amounts of savings in Turkish lira that were supposed to get them through the last 20 years of their life. They lost it all. And to make this situation clear to everyone, if you had saved 1 million Turkish lira for retirement in 2011, which was equivalent to 580,000 US dollars at the time, you would be left today with about $26,450 in purchasing power. And if that's not criminal, I don't know what is. But, and as proof that gold and silver get the job done, the price of a gram of gold when measured in Turkish lira versus the 2011 high has increased more than 3,500% from 101 lira to 3,670 lira, while to purchase the same amount of goods with that 101 lira, it now costs more than 1,500. And in the case of silver, and once again as proof to all the people who say silver has done nothing, for Turkish people trying to protect themselves from what's happened, from this hyperinflation, it's done a heck of a lot and has gone from 233 per gram at the April 2011 blow-off top high to 40 lira per gram today in an environment where you would need about 35 lira to purchase what that 233 would have gotten you back in 2011. So once again, we are seeing both gold and silver protecting purchasing power of people who are unfortunately experiencing hyperinflation. And Turkey isn't the only case of that, because even in Australia, a country we like to think is similar in many ways to the United States and Canada, the price of gold there has shot up more than 183% since the 2011 high as people struggle with the cost of living and a devaluing Aussie dollar. And once again, as in the case with Turkey, Australians are being protected by gold, because what you would have needed to purchase with 1,705 Australian dollars in 2011, you would now need 2,400 Australian dollars, while the price of gold has gone from 1,705 Australian dollars to 4,821 Australian dollars over the same period of time. So that is just proof of how metals protect you. It's not a joke. I don't say this to get clicks. I genuinely care about the decent people watching these videos, and I'm trying to warn you all about what's happening right now. It's not just something that's around the corner. Yes, it is going to get worse. I've warned you all about that. I think it's going to get much worse over the next 5 years. But again, don't be complacent, because it is happening right now as we live and breathe. Now, to answer the real question that I got, how do you use gold and silver as this is happening? Well, just because things are bad in a place like Turkey or getting worse in a place like Australia, it doesn't mean the people in the functioning economy just evaporated overnight. They're still there. They still use their currencies, even in Turkey, albeit to a lesser extent, where dollars and euros are used and are taking over. But they still have functioning gold and silver markets, and you can still exchange currency for gold and silver at those markets, and you can also exchange gold and silver for currency should you need it. And what I'm trying to say here is, despite the chaos, there are still local dealers and online dealers like Summit Metals, for example, that will buy your metals at a fair price and exchange metals for currency, just in the same way they exchange currency for metals. And if you're located in Australia, my friend over at Liberty Bullion will also take your metals at a fair price. This is not going away. This aspect of the market, the exchange between currency and metals for currency, as long as there are people working and earning a devaluing currency, there will be people, and this number is growing by the way, there will be people who will exchange that currency for gold and silver. And that's no matter what fiat currency is being used. And this guarantees a market for people who need to sell metals to cover unexpected expenses or to simply supplement their retirement as a consequence of rising inflation. Now, as things get worse, there is no guarantee that we will use gold and silver directly in trade. I don't think we will, in fact, but who knows, that day may come. And if it does, I hope you have fractional pieces to make that easier, and if not, I am sure an easy way of exchanging larger pieces for smaller pieces, so somehow making change will be devised. That said, until that happens, and again, I don't think that's going to happen, keeping gold and silver and exchanging small bits of it over time, especially if you're in a situation where you're experiencing hyperinflation, economic crisis, or just trying to supplement your retirement with precious metals, exchanging small bits to cover your immediate needs with fiat currency over time is the best way to approach it. It is what people are doing today, and it is how you use gold and silver despite all of the economic chaos that is unfolding around us. So with that said, I want to thank everybody for watching. Please remember, if you enjoyed the content, to leave a like. That helps get this video out to a wider audience. And if you really enjoyed the content and think that people in your life need to hear this message, please don't be shy and share it with them, as that helps grow my viewership. Now, as I say at the end of all of my videos, please remember to take care of yourselves and take care of each other. I'm wishing you all a fantastic and peaceful week ahead. See you in the next video. Goodbye.